Creating a defensive portfolio doesn't have to be complicated. We asked our ETF analyst to share 3 funds that could serve as the backbone of a low-cost portfolio that's less sensitive to market volatility.
iShares Edge MSCI Minimum Volatility USA ETF is a really strong defensive equity option if you are concerned about the downside risk that U.S. equities may present. This fund takes a holistic approach to reduce volatility, looking not only at individual stock volatility, but also how stocks in the portfolio interact with each other to affect the overall fund's volatility. It also takes steps to preserve diversification, limiting its sector tilts relative to the broad market. The types of names it favors are more defensive than most. These are companies like Johnson & Johnson that tend to have relatively stable cash flows. If you look at the fund's performance, it's tended to distinguish itself most during market downturns, and it will likely continue to do so going forward. Now, that being said, the fund does tend to lag during strong market rallies, but if you are looking for a smoother ride than the broad market, this is a really solid option. As expected, it has exhibited lower volatility than the overall market, and I think over the long haul, it will continue to offer better risk-adjusted performance than the market itself.
iShares Edge MSCI Min Vol EFA ETF is a sensible choice for foreign stock investments. This fund uses a slightly different approach to constructing its portfolio compared with a cap-weighted index. It starts with stocks listed in the EFA index, but then chooses those with the lowest volatility over the trailing year, and it also accounts for how these stocks interact with each other and attempts to construct the least volatile portfolio from those stocks. Low volatility strategies such as this one can provide smoother returns and better risk-adjusted returns on a comparable market cap-weighted index. As expected, this fund's volatility has been among the lowest in the foreign large blend Morningstar category. BlackRock currently charges 20 basis points for this fund, which is considerably low considering the alternative strategy in use here. This should give the fund a long-term durable advantage over many of its actively managed peers.
Vanguard Short-Term Corporate Bond Index Fund is a good option for building a defensive portfolio thanks to its low tracking error, low fee, and a conservative rate and a credit risk profile. The fund tracks the Bloomberg Barclays 1 to 5 year corporate index, which is market cap weighted, allowing the fund to keep its transaction costs low as it tilts toward the largest issues and bonds. Because it's cap weighted, the debt issuance activities in the investment grade space dictate the fund's portfolio. As a result, the fund is concentrated to the banking sector. However, they are large and well-capitalized institutions with a low default risk, allowing it to offer higher yields than comparable government security bond funds.